Hi everyone. Today is Tuesday, January the 28th, and this is the Moneyball Morning Report for the Benzinga Pro platform. We'll go through the hourly charts very quickly, but I do want to take a look at what's going on today. Durable goods, 830, so that just came out. We've got the Case-Shiller Home Price Index, consumer confidence at 10. That might shake up the markets just a little bit. So we're going to hop into the 1 hour chart because that Fibonacci from yesterday really worked well. We are looking at the E-Mini S&P futures, and we can see that, look at where this came into. 3.618, but our line in the sand of 59.53, we tested it, a lot of liquidity there, and it turned us right around at 59.48. Remember, what we have to do is, first thing, fails to close lower. Second thing, breaches resistance. That's going to be the top of this box. And the third thing, pulls back into a higher low. And so by the early morning, just before the opening tick, we got ourselves a nice pop between 9 and 10 from the bounce at 59.94. Great buy zone. Could you say, you know what, I'm buying this here? Yes, you could. You could say, all right, I'm going to use this 1 hour candlestick just so long as it does not retrace and close below that 30-minute edge, the 50% retrace, then I can buy it. And you can see the candlesticks do a pretty good job of holding us in the range here. It retraces the entire candle, but then moves up. Notice deeper pullbacks because we've got some negative pressure going. So that's what we want to watch for today. The continuation of, instead of holding just the 50%, it might lose the 50%, but begin to recover. And that's what we want to look for. We want to look for price action that stays above the close of the body of these candlesticks. So far, what they've done is retrace all the way and then move up. Here's another retrace, moves up. So key zones today are going to be 60.80 on the upside, and then 60.94 on the continued upside. Below 60.50, that would put us at the bottom of the opening candlestick formation. That's going to be a little weak. Notice what's happening here, right? We are failing to close higher, pulling into support, which is all the way down here. It just did it on this one. And in the last bounce up here at 60.68, it failed. But now we've got sideways motion. We have a momentum indicator that's fairly high. So it tells us we have a likelihood of retrace if the moving averages are flat. And so we expect it to come back into the 60.40 level. My suspicion is the following. Above 60.40, we've got buying pressure. Below 60.40, we've got selling pressure, and at 60.40, we're going to have ourselves a rock fight, okay? So be careful when you're trading around there that you don't say, hey, I'm just going to buy it, and if it starts dipping, you go, I'm going to hold it or I'm going to add. No, friends, don't do that. You're going to get drawdown. Just let it come into the support zones, retrace the level, and then choose what you're going to do. You know, I was talking to a couple of my kids way into the AI space, part of their general work field, and they are saying this DeepSeek stuff is just a shake in the road. So we needed this liquidation. Fantastic if we sit around here and base. It's going to be good for us in terms of being able to move to the next space upwards. All right? So there we have it for the ES. Let's take a look at the NQ. That's the E-Mini NASDAQ 100. We are only looking at the 1 hour charts today because we're really focused on this intraday motion of recovery or sideways action. Let's notice. What do we have? Big bounce up off the bottom. Take a look. It's at the 4 Fibonacci before it stops closing lower. It retraces to the halfway point of this candlestick formation right here at the 5 a.m. motion, but it doesn't get to resistance and pull back to a higher low until it's inside the Keltner band. And by then, it rockets up to the level of 21,371, probably 21,400, really, and then pulls back into a higher low, That happens to be the 3 Fibonacci. But let's do an eyeball test and watch this wave, right? Look at where the wave comes in. 50% of the range comes right back and kisses it. So these wave action events, you can use them very well to help you determine where it is your support zones are sitting, all right? Here we have a double topping formation. However, we've got a Keltner band that is not sloping downward. We have moving averages that are sideways, and we have momentum that's just dipped over. So what we are looking for is support action. My thought is the following: 21,229. If we hold that level, bullish, right? So if it comes into this zone and tests it, begins to bounce off of it, you'll be able to take a long, that 21,231. Your stop, could be 20, 30 points wide. So you want to be careful there. If it loses this edge, there's going to be shorting action below into these prior zones of support, 21,115. And then, unfortunately, we could see 20,900. So again, above 21,235, pullbacks are going to be buy zones. Below 21,235, bounces are going to be sell zones. And the real rock fight here might be around 21,250 to 21,270. Let's take a look at the YM. This is the E-Mini Dow Jones. This one just ran like the wind yesterday. Just look at that. Flight to safety. Amazing flight to safety. Now we've got a double top formation somewhere around 45,000. I think this might be highs for this particular instrument, this particular contract, but not sure. So we have a double topping formation, and we have divergent momentum. Moving averages are still up, so buyers are going to try and hold these zones. My thought is here, below 44,776, sellers are going to be in charge. Above 44,776, buyers are going to be in charge. So the pullbacks into this zone going to be buy zones as long as the moving averages are sitting up. If we lose that level, we easily could bounce into that area and continue up. That's going to be where the rock fight is in the YM, somewhere around 44,800 and 44,770. Careful with that zone, all right? Topping formation showing up, but under this trend event, the pullbacks are still going to find buyers. Let's take a look at the micro Bitcoin futures. We had ourselves, I missed this yesterday. Crudsicles. Okay, notice, pullback. This is at the 2 a.m. marker. Here, fails to hold lower. It still closes lower, right? See how momentum is down here? When momentum is down here, and you are in a negative Keltner band event, and you have negative slopes on our moving averages, these bounces will retrace. So you want to watch for price action that retraces and holds in order to get yourself involved. So here we are. Look at this motion. It comes up, pulls back, gives us our first higher low. Momentum starts lifting off the band, and then it moves right up over the resistance. You can chase it up over the top here as the VWAP and the moving averages are very likely. Notice how it holds the range. If you're thinking to yourself, holy cow, is this going to roll over? The halfway point of these 1 hour candlesticks are going to tell you your safety net. Okay, so what are we looking at today? Upward pressure, but a flattening of the moving averages and a slipping of momentum. This is very sideways. Notice what happens. We rotate over, moving averages flatten out. Look what the candlesticks have started doing. They will retrace each other. When moving averages get flat, candlesticks do this, particularly on the hour. So what are they doing? They're trying to find a place where everyone agrees that there's buying pressure. Where is that? My thought, it's value area low, 100,001,564. All right? So 101,500. Above that area, pullbacks are buy zones. Below the 101,500 area, we've got sellers But notice the slope of the bottom of this band. They are going to find traders that are going to try and buy this up. First place they're going to try and buy it, likely the round 100,000 mark. You know that's about a 500 point squishy there. Below that, the 99,000, and then a potential double bottoming at 97,900. Above this area, if we cannot get above 104,000, we know that we're caught in a range. All right, so you want to be careful. Wait for prices to come to you here. This is a very muddy price action event. Okay, I think we see a lot of muddy price action today. Has oil rolled over? Let me go see. I gotta check one of my other charts. Nope, it has not. So let's go to the current crude futures oil contract. And we pulled into the floor. Man, these Fibonacci's, they are absolute gold right now. Comes down into the area, loses it, very next candle, fails to close lower. Now, you might be saying to yourself, Anne-Marie, look at how long it takes to get up over prior resistance. Well, old resistance, new support. That number is 73.50. This is going to be the line in the sand today, right? Rock fight right in between the area of 73.20 and 73.70. Above it, going to be buying pressure. Below it, going to be selling pressure. And right in the middle of it, going to be a rock fight. So you have to collapse into tight time frames and figure out what you want to do. What is the chart telling us? Well, the chart's telling us two things. One, volatility expansion, because both Keltner bands are going outward, away from each other. So that's a rise in volatility. The second thing we learn is that these moving averages are flattening and turning upwards. We are above the VWAP. We also have positive momentum. This tells me pullbacks or buy zones. Where's the ideal pullback? Well, a lot of these candles are almost completely retracing each other. So the sweet spot has to be down here in this $73.50 area. We can't think about anything else but that, or we open ourselves to risk. If you want to use a very tight time frame, you can, but this is what I am seeing. Resistance, 74.15 to 74.30. Do we have news coming out? Well, consumer confidence might shift that. I have no idea. But if we do break away, see this trend? High, lower high, lower high, lower high, lower high. This trend is down. If it breaks this trend line, the sellers are going to be trapped short and they are going to want to cover. So where is that number? I don't know. 74.60. When they try to cover, it's going to shoot them up. Here's our volume point of control, right? 75.59. We could get there. I have no idea. I have no idea. What I do know is what I talked about before in terms of flow and what the market's doing. Gold gave us a fantastic opportunity to buy at 27.40 yesterday, right? What happens? Failed to close lower. Now it's back on the inside of the band. Punches up. Look, it doesn't get out of this range for a very long time. So the rock fight in gold today is somewhere around this zone of 27.40. We know this number. We know it. We've seen it a dozen times. Look at this wick down. Liquidates all kinds of weak hands long, but it holds this low. So now we've got this higher low trending. Notice Keltner band slightly moving up on both edges. That means we've got trend building. Look at the slope. Pullbacks or buy zones. Where is the pullback? Well, it could be shallow. It could be as shallow as 27.49. Do I love trading in this space? I don't. I love the savage fade down and then the meandering up the trail. And as long as it continues to hold a higher low, I'm going to hold it. What I want to see is a break of the heavy congestion between 27.58 and 27.62. That is where I see potentially a number of sellers trying to liquidate. And see this red here tells me that sellers, a lot of sellers piled in over this zone. They're going to be waiting here again to pile in. All right, let's take a look at SPY. Okay, savage fade at the 5 a.m. area, collapses lower, double bottom event, right? Notice, heads into resistance. That's this third candle. Pulls back, holds a higher low. So this is the next candle you get involved in, right? This one right here at 594. Now, what do you want it to do? Well, you'd like for it to hold a 50% of that range, but trend is very negative. So old resistance, which is this first collapse down into this area, I'm going to move this up, right? 595, that's going to be where our rock fight is today, in my mind, right? We do have a line in the sand at about 597. If pressure shifts more positive, we'll hold there. So expect the first group of buyers to try to come in around this area, but don't hop in right away. Let them come in, fight their fight, throw their big jagged rocks, and then watch it stabilize and take the trend up from there. That's really the line in the sand today. If we hold 595, pullbacks will remain buy zones. But if we lose 595, we will very likely test 592 and potentially lower. You know, my thought is we fill in some of these low liquidity areas, right? A nice slow grind down. I know it feels like garbage, folks, but it's very good for the market to do this. So let's just relax, be patient, wait for the good edges, and then strike. Okay, let's take a look lastly at the Qs. Savage move down. Here we go. Fails to close lower. Bounces into resistance. Look at this bounce, right? The Qs are absolutely insane. And trading the NQ is the same way. But this kind of savage motion, this came from the deep seek information. Look at where it bounced to. See that resistance area? Keep it in your mind. It's the 50% range of the wave that we drew prior. Okay? 50%. Here's that wave right from here to here. 50% of that comes right into the 529, immediately begins to collapse. Absolutely beautiful short. Beautiful short. Comes in, loses all the levels, goes all the way back down into 502. That's a 30-point move in a 1-hour candle. But it fails to break lower. And so as it closes, it tells us, hey, I think I've got some traction here. Here's the initial candlestick. You want to see it hold. Here's this big hourly candlestick that breaks down. It's important. You want to see it hold 511. Gets above 511, you can chase it. Notice, you're going to have to keep an eye on the Qs today because they are retracing their entire candlestick formations. 2 candlesticks to the left, they're retracing it. Okay? So wait for the price. Where's the rock fight going to be? 511. Above 511, dips into 511 will hold. Below 511, fades below 511, and bounces are likely to fail until they don't, because at 511 is where we have the rock fight. Okay? Very interesting days. Not particularly easy charts to read, especially if you're trying to rush into a trade. Be slow. Slow down. Take a deep breath. Vocalize the trade. Step through it. Manage the risk. Talk yourself through not pushing the button too early. You're going to be in great shape. All right? Good luck, everybody. I'll see you on the Benzinga Options Show this morning at 11 a.m.